Truth about the SafeMoon hard fork. SafeMoon is another digital currency similar to Bitcoin and Ethereum with a couple of key differences. Its creators say they need to fix some of the problems, like price volatility, that are common in other digital coins. To do this, SafeMoon aims to discourage day trading of its coin and to remunerate long-term holders by charging a 10% fee on every sale. Big parts of the fees collected are reserved for existing coin owners who get a sort of dividend in the form of extra coins. Hello guys, and welcome back to our crypto channel. Today in this video, we'll discuss and share latest updates on SafeMoon, SafeMoon reverse split, and the truth about SafeMoon hard fork. Stay tuned with us until the end so you don't miss out on anything. Also, make sure you're subscribed to our channel. So let's get started. Posted by Just Saying on Reddit says, individuals are talking with such FUD about the proposed hard fork and possible token consolidation. 1. Hard fork. Hard fork allows the team to fix large numbers of the issues the community and FUD pushers said should have been fixed. So presently, they're looking to fix those issues and add extra functionality to the benefit of the community. Individuals still complain. They finish a CerTick audit prior and are rated 88-89, putting them in the top 25 audited tokens out of truly thousands of tokens. A large number of the changes that will probably be made as a component of the hard fork will address open issues from the audit, which means they'll have a considerably higher audit score post-fork. What's more, individuals still complain. As to token consolidation, it's anything but a reverse split. That's a stock term and concept. Stop calling it a reverse split, that is uninformed. What's more, here's the place where it gets fun. We should do some simple math. Facts. SafeMoon started with 1 quadrillion tokens, total supply. This number is simply too many. With this number of tokens, it can never get to a per token price of even 1 cent. That would give SafeMoon a market cap of $10 trillion, 5 times the market cap of Amazon. Also, $1 would make SafeMoon more important than everything else on the planet, combined with a market cap of $1 quadrillion. At dispatch, they burned 223 trillion tokens. This left 777 trillion tokens in supply. Since March, an extra 210 trillion tokens have been burned through typical trading, buying, selling, and transferring. The current number of tokens is still too numerous at 577 trillion. The team will stop the burn at some point. Speculation is that it will be at 100 trillion or 10 trillion tokens. This is still too numerous tokens for SafeMoon to be anything but a penny stock. Most individuals don't invest in things that can't be worth more than 1 cent max. Simple financial understanding of the market shows that. Assumptions. If the burn continues at the current average rate of the last 6 months, then it should require 1 more year to get down to 100 trillion, yet as I said, that's too numerous. But let's say they stop the burn at 100 trillion tokens. Here, the system switches from an open system with burn to a closed system that has a recirculating tax, low plus reflections. I'll assume a person presently has X tokens, as I'd prefer not to calculate reflections, yet when the burn takes us down to a total of 100 trillion tokens, that person will have a total of 1 billion tokens. Assume a total market cap for SafeMoon of $100 billion, making it a significant token. This would give a per token price of 1/10 of a cent. SafeMoon can simply not get to a lot more noteworthy than 1/10 of a cent per token at 100 trillion circulating supply. Anybody saying 10 cents or $1 at this supply is a moron. Consolidation. This is a must. If the dev team waits until the burn reaches 100 trillion and afterwards cuts the burn, then consolidates the tokens at 1,000 to 1, the total supply is decreased from 100 trillion to 100 billion. The holder's 1 billion is diminished to 1 million. However, the market cap of SafeMoon and the dollar value of the holder's bag has not changed by any means. The main thing that's changed is the price per token, which has increased by 1,000 to $1. Surprisingly better, they should consolidate down to 100 million tokens, which would then have a value of $1,000 each. The holder would have less tokens, however, the total value would be unaltered. The large contrast would be that it very well might be treated in a serious way as an investment and not a penny stock. Investors would purchase fractional tokens which can't occur now. Starting thereon with a closed system where there is no burn, just a tax that incentivizes holding, and a reasonably sized total circulating supply of 100 million tokens, we can genuinely moon. TLDR, V2 token required. New functionality, wallet, blockchain, exchange, Phoenix, and so on contribute to the burn. Once burn hits target, logical 100 trillion or 10 trillion, stop burn, then consolidate tokens down to 100 million. Moon and beyond. So basically, if all goes perfectly and well executed, SafeMoon will have upcoming collaborations and much more in the coming days. It's true that after Hank Wyatt left the SafeMoon team, a lot of FUD has been coming in these days, but it is temporary. It's the dip in the crypto market that will rise again, and the future of SafeMoon will be bright. So further, let's see what stock split means. Here's a fast outline of what a reverse stock split is, the reason a company would need to do a reverse split of its shares, and regardless of whether a reverse split is a positive or negative thing for investors. A reverse stock split is a situation where a corporation's board of directors decides to lessen the outstanding share count by replacing a certain number of outstanding shares with smaller number. Reverse stock splits work the same way as standard stock splits, however, in reverse. A reverse split takes different shares from investors and replaces them with a smaller number. The new share place is relatively higher, leaving the total market value of the company unaltered. Calculating the effects of a reverse stock split is easy. Simply divide the quantity of shares you own by the split ratio and duplicate the pre-split share price by the same sum. For instance, say a stock trades at $1 per share and the company does a 1-to-10 reverse split. On the off chance that you own 1,000 shares, worth $1,000 at a current price, you'll get 1 share each for 10 old shares you own, or 100 new shares. Quickly following the reverse split, the stock price will rise tenfold to $10 per share. That will leave your smaller position still worth the same sum, as 100 shares duplicated by $10 per share equals $1,000. To be perfectly clear, a reverse stock split does not change the general value of your investment, essentially not without help from anyone else. For what reason do companies do reverse stock splits? A company does a reverse stock split to get its share price up. The most common reason for doing so is to meet a prerequisite from a stock exchange to try to not have its shares delisted. For instance, the New York Stock Exchange has rules that permit it to delist a stock that trades underneath $1 per share for a lengthy period. Moreover, numerous institutional investors are not permitted to invest in stocks with share prices under a certain minimum. Are reverse stock splits good or bad? A reverse split isn't necessarily good or bad without help from anyone else. It's simply an adjustment of the stock structure of a business and doesn't transform anything identified with the business itself. Overall, a reverse split is usually taken as a difficult situation by the market. In uncommon cases, a reverse split buys a company the time it needs to refocus. For instance, a reverse split worked for internet travel giant Priceline, presently Booking Holdings, NASDAQ BKNG, which did a 1-for-6 reverse split following the internet tech bust. Since bottoming in late 2000, shares of the travel company are up by over 6,000%. So most would agree that a reverse split can be a powerful tool for struggling companies to use. The reverse split itself doesn't result in any adjustment of the value of an investor's position in a stock because the smaller number of post-split shares is offset by the relatively higher per-share price. In any case, a reverse split can certainly change investors' perception of the company. Stocks that go through reverse splits often see renewed selling pressure following the split, and the quantity of companies that rise up out of reverse splits to deliver strong long-term returns is small. Do like this video. Also, subscribe and share our crypto channel. Do let us know your thoughts about what you think might be coming next for SafeMoon in the comments section.